Welcome everyone to the next episode of Off the Block, where my research colleague Max Michielsen and myself are having some of the brightest, smartest, and most interesting minds in the crypto space as guests. We're going to talk about everything interesting on and off the blockchain. And today I'm especially excited because we have Vivek Raman, co-founder and CEO of Etherealize, which is a combination of Ethereum and Realize, which I'm sure Vivek's going to tell us a little bit more what this exactly means as a guest. Vivek, I'm very excited to have you here, and also thank you very much for taking the time to being on our podcast.
It's great to see you, and thanks for having me on as well.
And as with all our podcasts, the first session that we're going to have are our 10 rapid fire questions, which Max going to start off with the first five. And actually, I'm very excited to hear the answers that you have and the reasonings behind it.
Perfect.
Yeah, we love to play, a little bit of bad cop, good cop over here. You can tell I'm obviously the good cop. And I think we're going to be starting with just a little bit touching on your background probably as well. But it's just generally, when was the first year, or when was the year that you actually had heard about Ethereum for the first time?
So I was on Wall Street for 11 years. I'm not early to Ethereum at all. I heard about Bitcoin, Ethereum all through Wall Street and ignored it because everyone else did. And I was like, this is not a real technology. When I finally left in 2020 is when I dove back into Ethereum full force, used Uniswap for the first time, and said, okay, this is actually going to be the future of finance.
Nice. I think actually we must have gotten in around the same time there to the Ethereum ecosystem. So not the earliest, but definitely fully riding that train now. Now, I assume that Ethereum is your favorite crypto asset. And if it's not, do let us know. But what is your favorite crypto asset aside from ETH, and why?
I am such a strong believer in ETH being the global store of value asset that emerges as the dominant reserve asset across crypto, that it's really all ETH. I mean, if I had to choose for the next 20, 30 years where I just keep wealth, it'd be ETH. So second favorite asset would be wrapped staked ETH. It's the best I can do.
That's a brilliant response. Normally our third question, which is the one we're coming up to now, is Ethereum or Solana. But again, as you've been waxing lyrical over ETH, I think that's a bit of a no-brainer response. So I will just slightly spin the question as to, besides ETH, if you were interested in putting your capital somewhere, would you allocate it to Bitcoin or Solana?
I don't love either of those choices. I would probably allocate it across some L2 tokens, but Bitcoin. I think Bitcoin has earned its place as digital gold. I think Ethereum again will supplant that, and I think Ethereum has a chance to flip Bitcoin's market cap. But Bitcoin is a single-purpose store value asset, and if I had to choose, I think Bitcoin has crossed the chasm. So, hands down, Bitcoin. I think the other competition to Ethereum, and those players end up looking more and more like software companies or tech companies, and so that becomes a race to the bottom of lower fees, like lower margins, and I don't love owning those tokens over the long term. So, Bitcoin, begrudgingly.
Sounds good. Well, thanks for the response, and we'll head back to the Ethereum ecosystem since you're so fond of it, obviously. And one question is, which project within the wider Ethereum ecosystem are you watching closely through to year end, and maybe also the start of next year?
It's hard, and my disclaimer is I don't like to pick favorites because everyone working on Ethereum is, I call it ETH digital oil. I call Ethereum the platform for all tokenized assets. But Ethereum's real potential is being the world computer. So there's so many different applications people can build, and they're all cool across social, across gaming, across obviously financial. And all the different L2s are incredible extensions of what Ethereum can do. So with that disclaimer, this isn't a picking favorites. I just think one super unique one to watch is Lighter. Lighter actually just announced a fundraise today. It's because Lighter is cranking the potential of Ethereum's TPS. It's using ZK in a very, very unique way. And I think it's going to show that applications as L2s are better business models than alternative L1s. So it'll end up showing lighter versus hyperliquid, lighter versus the other alt L1s. I'm excited to see that narrative and trajectory play out. And also, Vlad and his team are ridiculously pedigreed, and they've had unbelievable experience. So that'll be a fun one to watch.
Yeah, and I mean, if I'm not mistaken, and this is maybe a little bit of a sneak peek into next year's state of crypto predictions. I think that's a little trend that we are also looking at, and could see continuing to happen throughout next year. So good to see great minds think alike. And the last question from the good cop before I pass you over to Darius is, what's one trend that you believe at the moment is undervalued or underhyped, let's say, in crypto, of course?
So let's start with what is hyped and is in the spotlight, and that's what I'm working on, which is tokenization of all assets. I think all assets should be digitized and put on secure public blockchains, and I think Ethereum is the resounding answer to that. If I weren't doing Etherealize with tokenized assets and bring the financial system on chain, I would be focused on AI and agentic payments, because I think that the AI is the biggest other technology other than blockchains that are both hitting at the same time. AI agents can do wonderful things with information. AI agents can't do that much with money yet. So it's almost like AI agents necessitate having public blockchains to actually transfer value. So it's just the most complementary technology. Blockchains allow for scarcity of value. AI allows for abundance of information. They're like the most complementary technologies, and it's going to be really inspiring to see what they can use. There's a world where AI ends up being the biggest user of Ethereum. When I go ask every single AI platform, AI, ChatGPT, Grok, etc., where the agents themselves would store their value and use payment rails and use money, all of them choose Ethereum. So it just shows that Ethereum does stand out as the most secure, decentralized platform to navigate for even that future user. But I think that design space is unbelievable, and I'm excited to see people innovate there.
I mean, great. I mean, first, to make something clear, I wouldn't consider myself the bad cop at all. And also, between Max and myself, I'm the bigger Ethereum fan and supporter. So I just want to say, actually, I think Max is the bad cop and not me, just to make it clear. And also, I love hearing that you're a big fan of Lighter. I've been shilling it internally in the team. So we have all been I didn't want to say farming. Maybe that's also an issue within crypto that we can talk about. I was collecting some lighter points over the last couple of months, so also very excited to see what's happening here. But the next question I have, Vivek, and I believe you partly answered it, would have been, what's the most exciting use case of Ethereum? You mentioned tokenization. Would you say it's tokenization? Or maybe because you mentioned it, besides tokenization, what's another very exciting use case in your opinion?
I think tokenization is the first step, but actually creating applications that take all the manual processes that the financial system does, the buy side, the sell side, you're an asset manager, and turn them into programs, turn them into smart contracts, is one of the coolest sci-fi upgrades that you can see to the whole financial system. It's very hard to get TradFi to move, because TradFi is rooted in regulation. TradFi handles a lot of value, and it's not supposed to innovate, it's supposed to safeguard money. And so the technology that can actually upgrade traditional finance while keeping all the security and reliability is Ethereum. And now that the technology is ready, I'm excited to see people just turn banks into programs, and that's going to unlock a lot more innovation. I mean, you guys will probably launch a lot of ETFs with underlying tokenized assets, and then you can start to do a lot of customization, and the innovation potential becomes absolutely unreal. So that's a very, very cool and inspiring use case. Longer term, again, we can talk about AI, we can talk about zero knowledge proofs, we can talk about privacy, like all that just augments this. But the base use case is taking the world's physical assets, digitizing them, and then seeing the magic that can happen when you put them on a public blockchain.
Now, the next question I have, which I'm very interested in what your opinion is, because I sometimes ask myself as an Ethereum proponent how I should phrase it. What's your favorite Ethereum narrative? Because there's been so many over the years. You mentioned already two, World Computer, Digital Oil, Ultrasound Money is another one which is very much known. Do you feel they all tie in each other? If you had to pick one. I know you published this report, Digital Oil, which I was very happy about because I mostly use Digital Oil because we often in the research team, we say Bitcoin is digital gold. And so having Ethereum as digital oil feels very intuitive to, like, let's say TradFi investors. So they get like the differences a little bit. So it's different asset class. It is an issue, I would also argue, within the Ethereum, like, let's say, how to sell Ether to people who are not into crypto. But maybe just out of them, which one is your favorite narrative? And why would you say, should it be only one, or can they all basically tie into a nice story narrative?
So there's so many use cases for Ethereum, and ultimately, Ethereum's real potential happens when we achieve all those use cases. It's like saying, what's the internet? It's the platform for everything, for information, for commerce, for business, so there's no one narrative for the internet, but everyone knows how powerful the internet is. Ethereum and all crypto ecosystems have this unique issue where they have a network and they have an asset. So if we split the narratives into two, I think by far my favorite narrative for ETH is digital oil. I think that Bitcoin has won for now on digital gold, although there's potential issues with that. But if you look at oil is a much higher market cap than gold is. Oil is much more useful. Nations stockpile oil. I mean, oil is a commodity that's sought after globally, and people know the unique value of it. So if you analogize ETH to the digital version of that, I think it actually makes a lot of sense. Like, you need ETH to secure this global infrastructure that's going to take over the financial system, or that's going to actually augment the financial system. It's not going to actually take it over, which is an important nuance. And it's going to plug into every single bank, asset manager, and ultimately business, and then consumers will be on it. So as we think about Ethereum becoming global infrastructure for the digital economy, ETH is digital oil that powers it, and I love the digital oil narrative. And then when you go to Ethereum, I think Ethereum's global infrastructure. Like we said, it's the global blockchain where all commerce and businesses and activity and financial activity will live.
I mean, I love hearing this. Now, the next question I have, I'm also very interested in your opinion. What's the biggest misconceptions people have about Ethereum? Bitcoin is usually like it uses too much energy, it's great for money laundering, blah, blah, blah. But in your opinion, on Ethereum, what's the biggest misconception?
I think people still ask at a very high level that they ask why Ethereum is quote unquote slow. It's not slow. I mean, you have 12-second block times, and Ethereum has been designed for max decentralization, security, uptime, and reliability. That's what you need for a financial system. But Ethereum's not slow. You have layer 2s built on top of Ethereum that extend Ethereum's security and then do really, really interesting execution environments on top of it. And that's why I highlighted Lighter early on, but all of them. I mean, Arbitrum, Base, ZK Sync, Polygon, like every single one has uniquely tackled execution. And the fact that we can have this marketplace of really, really fast, customizable ecosystems on top of Ethereum lets you have your cake and eat it too. You can have a secure global infrastructure that's always reliable. You can have customizable execution. And by the way, those customizable layer 2s, when they reach their full potential, which is happening very quickly, will be faster than any layer 1, because L2s just have to do execution. Layer 1s have to do execution and consensus. And so it will always be slower at the max limit to do execution consensus than what a layer 2 is doing. So yeah, Ethereum's not slow. Ethereum is lightning fast. Ethereum's ready for global scale. Ethereum can be both institutional and consumer and retail, and Ethereum can be safe and secure. And we're going to quell that misconception very quickly.
I mean, I love hearing this, and I hope that we also at the 21 Shares research team can also contribute to basically clearing this misconception for investors. The next question I had, I think you already answered that, and it's also a little bit of a mean one, so I don't want to have an answer from you, would have been, what's your favorite L2 and why? I think there's many different ones, so we shouldn't pick one. The last question I have in this segment, which I love, and actually Max came up with this, so we have it always in a different version for each guest, is if you had to describe Ethereum right now with one word, what would be this word?
Settlement. And that will, I'm choosing that right now because right now our focus at Etherealize is institutions and bringing their assets on chain. Ultimately, Ethereum is, again, much bigger than institutions. It'll bring retails on chain, but then when retail institutions and all the applications and assets are in one place, the economic activity can be unbelievable. But the part that institutions can understand, because that's what they need reliability for, is settlement of assets. And settlement means security, reliability, traceability, but also privacy. All of that can happen on a platform, on a neutral platform like Ethereum, and they're starting to get that. They're starting to get that the blockchain use cases are for settlement, and that's why everyone's trying to tokenize assets on public blockchains now.
Makes a lot of sense. Makes a lot of sense. But you've spoken really highly about Ethereum in the early 15 minutes of this podcast, and fully agreed with your view as well. But we also want to spotlight a little bit on maybe your background and your story as well, because what really prompted the shift from going at trading desks in traditional finance to founding your own blockchain infrastructure startup? It's a big leap to take, and ultimately it's paid off for you, and you're working in an industry that you love with a project that you're very attuned to. But I'm just curious as to maybe hearing a little bit about your background, your experience in TradFi, and what led you to really take the boat to the other side.
It's a little ironic because I always say that people look at Wall Street from the outside and say that it's a bunch of people taking a lot of risk. It's actually not that true. There's always some bad apples that take some risk, and then sometimes there's periods of greed, and that leads to things like the financial crisis. But Wall Street's about safeguarding money, and it's about moving money around efficiently, and about creating products that are going to improve access to money and improve capital markets. And so it's a little ironic that I wanted to start Etherealize when it was the least risky time to get into blockchains, which was last year. I love Wall Street. I love the 11 years I had there. I mean, I was at Morgan Stanley, I was at UBS, where you said your office is right next to. I was at Deutsche Bank, I was at Nomura. I met incredible people. It has the culture of the most motivated, most ambitious, honestly, most innovative people that I've ever met, and I built an amazing network, a lot of friends, and so it's an amazing culture, and developed a lot of discipline and amazing habits there. The only reason I left after 11 years is because there was no underlying technological innovation whatsoever at all. Like I traded credit instruments, high yield bonds, and credit default swaps, and then a bunch of fixed income alongside, and those markets just never really evolved. So, which is completely fine. The U.S. capital markets are the strongest in the world, and everything works. So there's no real need to really change technology and quote unquote experiment. That's why we're so safe and secure. That being said, after 11 years, I said, if there's ever a time to go find something that has some technological upside and convexity, it's now. I ignored a lot of tech things while I was on Wall Street, and including Bitcoin and Ethereum. I dismissed it just like everyone else did, and if I hadn't dismissed it, I would probably be in a much different life spot. But all that said, it's ironic that I left Wall Street in 2020, immediately serendipitously met people at the Ethereum Foundation in Austin working on the merge, that were working all working for Danny Ryan, which is a little bit ironic that it comes full circle. And I just started learning. I said, okay, I don't have a Wall Street bias anymore. What is Ethereum? And again, I used Uniswap for the first time, and I was like, why is every trading operation not this simple? Like, why has finance not upgraded to its internet moment? And that hooked me into Ethereum. And then once I got there, I started going down the rabbit hole and saying, okay, this whole merge from proof of work to proof of stake is going to make ETH a superior asset to Bitcoin. I think that having an application layer is going to allow, and the smart contract language, I learned a little bit of Solidity, just enough to say that, oh, wait, you can build your own financial programs that mirror what a bank does. I was like, this is so obviously the future. Learned about the L2 roadmap, which Ethereum's been working on for a long time. Said, oh, wait, customizable blockchains makes so much sense. And then just worked on trying to see if there was actual institutional appetite for the last 4 years. And I mean, all my friends at the banks and asset managers politely laughed me out of the room and said, great, go back to blockchain world. Like, we're not going to use any of this. So I said, okay, you know what? It's not time yet. Last year in 2024, all of that shifted. when Larry Fink, who's one of the titans on Wall Street who runs BlackRock, said that the whole world's going to be tokenized, people start to listen. When the Ethereum ETFs got approved, people started to listen and say that even under Gensler, they approved ETH ETFs. Maybe there's something here. Maybe Ethereum's not a company or a security. It's a commodity, and it's a global platform that institutions are using, again, despite regulatory hostility. Anyway, all of that resulted in 2024 being the best risk-reward time to actually go all in on Ethereum on an institutional front and say, let's mobilize, let's complement the EF's effort. The EF is incredible at R&D. The EF's incredible at pushing the roadmap forward. The EF should not necessarily be doing sales to Wall Street. Like that's not, or product development for TradFi applications. That's just not the scope. EF's a decentralized organization, and Ethereum's a decentralized blockchain. So there was a very clear need for Etherealize, and so I stepped in, got a little bit of support from Vitalik and the EF, and then got some amazing people from TradFi, and ultimately got the best people from Ethereum as well, including Danny, including Zach, including Grant Hummer. And with that, I mean, we launched Etherealize, and I'm happy to say that, I mean, the demand's there, the appetite's there. Now people are actually taking the meetings and the phone calls, and people want to build real things. So,
I mean, I think that's great to hear. Vivek, I had one question. I mentioned before that Etherealize is the combination of Ethereum and Realize. Maybe in your own words, what does this mean? What do you want to accomplish? And why choosing this name? So it alludes that some people still need to realize something, or how can you understand that?
I think it's more of, let's realize the potential of Ethereum's platform. I mean, through 2024, a lot of alt layer ones, which I view as honestly zero sum and taking away from the actual magic of blockchains and potential of blockchains. A lot of other alt layer ones that are honestly like disguised as companies. I mean, they raise capital like companies. They're VC backed. I mean, there's a lot more points of failure. They started gaining a lot of prominence. So before starting Etherealize, when we saw that other L1s were in real consideration with banks and asset managers to deploy assets on, I was like, there's something wrong here, because Ethereum is the global infrastructure, and it's built for resilience and security, and it's built for everyone to build on, just like the internet. And that's not happening. So I was like, Ethereum needs to realize its potential, and that has to come from a third external force, and that's Etherealize. So yeah, it would be a shame if Ethereum made all its design architecture trade-offs and chose its again, it's L2 scaling roadmap, it's architecture based on global utility, and then the world didn't use it, and it went to a more brittle L1 blockchain, which ultimately those don't last for a long time. It would be a shame. So I wanted to help realize the potential. I want to help bring in the institutional use cases to Ethereum, and I like that Etherealize is a verb. It's a call to action. It's like, let's bring our assets, let's bring our processes, let's bring our operations onto Ethereum. Let's plug into Ethereum, and let's just make everything in a positive some way better, from operations to trading to settlement to tracking, etc. So.
Yeah, I want to double click a little bit on what you just mentioned on the institutional interest in Ethereum specifically, because as you mentioned, there's a whole swath of different, smart contract platforms that could potentially be a competitor to Ethereum, also from the institutional side. So what do you think has driven the interest in Ethereum specifically over some of those other competitors, particularly since the summer? Because I think since, a lot of these regulatory catalysts have come in from the US in the summer period, with the likes of Genius and the Clarity Act passing through the House as well. I'm just wondering if you think that's the main driver, if you think the architectural setup of Ethereum as the most secure and most decentralized platform is the driver, or is it something completely else that we haven't, acknowledged as of yet?
I think the simplest answer is actually just the right one, is that blockchains aren't new. I mean, Bitcoin's 15 years old, Ethereum's 10 years old, over 10 years old, and Ethereum, it's not like banks aren't stupid. Like Wall Street knows how to profit maximize. It's literally the job, and they know how to evaluate technologies. The risk reward of adopting public blockchains was just not there for the last 10 years. And so what happened? Every bank developed their own internal private instance of a blockchain. Most of them are Ethereum based, like Hyperledger base is Ethereum based, JP Morgan's internal blockchain is Ethereum based. A lot of the experimentation, even between bank to bank consortiums, that happen on EVM based blockchains. So why did that happen? It's because they were looking for a way, banks were looking for a way to integrate blockchain tech without actually unlocking the full potential, which is going onto a public blockchain. So we just had the exact same analog to before the internet. There were a bunch of different intranets, and every bank had their own intranet. And because there was a different type of intranet per company, no one wanted to use the other people's intranets. And so you don't actually get the real upside until you actually plug into the full internet. The problem is the internet in this analog was illegal until basically last year. So we needed a lot of governmental support, especially in the U.S. The U.S. capital markets are already the best. If something's not broken, you don't need to fix it. So until there was that regulatory push of saying, let's put stablecoin legislation into law, so you actually can use stablecoins on public blockchains. Let's advance the Clarity Act, which I think is going to pass at some point. And so with that, it's going to create an actual framework to put digital assets into the broader U.S. economy and financial system. That's the only way that Ethereum is going to achieve its potential, and so that just happened. So I mean, until then, the banks and asset managers are going to be take the lowest risk approach and either use internal private blockchains or just experiment with small pilots. But you're seeing that now the default is becoming public Ethereum, now that it's de-risked and people can actually use the benefits of it. And I mean, BlackRock sort of started it last year, even with under the Gensler regime, they launched BUIDL on Ethereum. I think a few days ago, Citi just tested custodied deposits using Ethereum. They didn't use a different blockchain. They use Ethereum because Ethereum's the internet, so it's the default. It just needed to be de-risked from a regulatory standpoint. It also helps the technology is ready. The technology is scaled. We've had 10 years of uptime and complete reliability. We've also seen the proliferation of the layer 2 roadmap. You're seeing very successful deployments like Coinbase's Base, and then Robinhood's going to have their deployment on Arbitrum for tokenized stocks. So now you can start to see the business model too of a very, very high profit margin ecosystem that plugs right into Ethereum, that represents a custom chain for a bank or a group of banks or asset managers, and that's very, very powerful. So again, I think Ethereum's real potential and journey is starting right now after 10 years of hardening the tech and building a track record. That's why I think we're at the tip of the iceberg for both adoption and for ETH price as a result.
No, and I agree personally, and also A16Z, they just published their big State of Crypto research report. I believe it was 1 week ago. And they also said they framed 2025 as the year where crypto went mainstream. So there's hopefully a lot of exciting things to come. Maybe specifically on the topic of tokenization. And I'm interested what your take on this is. How do you see this issue of like different issuers of, let's say, tokenized equity and different like token standards? Because ideally we want to have everything, like in the same standard so we can seamlessly integrate. You make the example of the internets, like if each company has their own internet, they don't want to use the opponent's internet. How do you feel will this play out? Will it be the TradFi players who just have the dominance, so basically they're going to enforce their standard and this become market practice? Will it come more from the crypto native players, which we are seeing now to some degree? Will it be a joint venture like we saw with Robinhood and Kraken? Like, how do you see it develop? Yeah.
I just have a follow-up to that, if you're able to answer it as well, because this is something that frustrates me personally, is that question. It's tied to Darius's question, but the whole question about composability. How do we solve that? I mean, if you were able to solve that, we wouldn't be here probably on this podcast. But just a broader question as well.
I think it's inevitable that you'll see the original crypto native ethos of having permissionless assets across the whole DeFi ecosystem. That's going to meet in the middle, and then the TradFi having a lot of rigid regulatory hurdles to need to navigate. That's easing up, and that's going to meet in the middle. So what's the answer is you're going to see max innovation where, and let's take tokenized stocks, for example. There's a bunch of different permutations of tokenized stocks, and that's a good thing because people are going to innovate on every possibility. And then ultimately, as with power laws, there'll be a winning type of standard, and then everyone else will adopt that too. So there's some issues of tokenized stocks where you put the stock in an SPV and then you tokenize the interest in the SPV. That's probably a little less efficient, but it's a good starting point. There's others where you just natively actually tokenize the stock. That's probably the most interesting. There's some, but then you start running into issues of like, where is the transfer agent? Who has the governance rights? Like, are the governance rights going to belong with the stock token, or are they sitting with a third party and then just the economic interests are in the stock token? All of these are possible. Like, there's a lot of permutations where retail investors don't actually want governance. Like, they don't want to vote on Elon Musk's Tesla compensation package. They just want Tesla to go up and they want to make money off it. Others care more about the governance and they don't actually care about the economic benefits because they want to, acquire companies or help shift corporate governance. So the permutations are endless. Crypto allows you to express all of those permutations, and ultimately some will win. So I mean, I think there'll be a couple standards where you'll have a very composable set of real world asset tokens where it's just economic interest, like an ERC20 with the upside of Tesla or Nvidia, but no governance, nothing else. So that way it can plug into Aave, it can plug into Uniswap, you can LP it, people can use it as collateral. There'll be more regulated governance type tokens with where you actually have to have some sort of fiduciary duty if you're voting, and that's probably how I think it'll split. But I don't see 100 different standards. I think right now you start with 100, it'll converge to a few, and this whole thing only works if you have composability and standardization. And I think TradFi gets that too. I mean, all of it will eventually become composable and plug into different applications. And we'll see a lot of different applications pop up as well. Some for regulated tokenized assets, some for permissionless, and some for in the middle. And I'm excited. We're going to do our part as well to help build that infrastructure and build those applications to increase to have max composability.
If you have to give a timeline for this, what would be your estimate when we see, like, let's say, one or two dominant, let's say, standards for tokenized equity?
It's already starting to happen. I mean, we have ERC 3643, which is, I mean, Atkins talked about it, and it has a lot of big proponents within the Ethereum ecosystem that we're friends with. That's a very, very good standard. You're seeing people start to put the ERC 20s with fewer and fewer bells and whistles, and there's companies that are working on that. So I think the first step is to bring as many assets onto Ethereum as possible, because once the assets are here, then the innovation can happen. I don't think we have enough assets and RWAs on public Ethereum yet, and so that's like the first call to action. But after that, assuming in the next year or two you see, I mean, trillions of dollars of RWAs come onto public blockchains, I think that moment is now. Then I think 1 to 2 years after that, you'll see innovation and standardization. So maybe 3 to 4 years from now, you'll have some dominant standards. All of it could go faster. Again, like we spent 10 years of Ethereum being around, and we've spent 4 years of regulatory chill in the US. So now that all of it's possible, people are innovating faster than they would have anticipated. So, and the risk is now it actually goes faster, not slower, which I'm excited about.
I just have a quick follow-up tied to, the broader question of tokenization hitting off. And I think this is maybe taking a step back and also looking a bit at the macro context. So what we are seeing is that globally speaking, rates are coming down. Now, whether that's justified or not, that's a whole separate question, and I don't want to go into there. But I do want to tap into your TradFi knowledge to kind of ask you, how do you expect this to maybe affect the adoption of tokenized assets, because they're able to generate usually higher yields than you're able to with just the interest rates that you're being paid on your cash? Or also maybe does this tempt players to enter into decentralized finance more because there's more risk-taking activity and they want to generate greater yield? Do you see that as a driver, or do you think that is too big of a global context that people don't actually look at these things and move to DeFi or tokenized solutions as a result of that?
No, I think it's actually the perfect storm of both. I think both are actually very, very positive catalysts. We've been in a tough market since basically 2022 in terms of altcoins, tokens. I mean, I thought ETH was going to hit 10K a lot sooner. I think it inevitably will, and it'll go much, much higher. But a large part of that is we've been in a really difficult rate environment. So everyone says that it's the end of the 4-year cycle now, which is funny to see that group think when we're also at the best adoption moment we've ever had in crypto, like by far. But I mean, part of the 4-year cycle is driven by, political cycles and also rate cycles. Rates are coming down. This is the first time we've had rates actually coming down at the end of a cycle. Last cycle, I remember Fed started hiking rates, and that sort of marked the end of crypto price appreciation for a long time. So no, rates coming down should be very, very good for crypto assets. So that's thing number one. That means that yields in DeFi increase, and specifically safer yields in DeFi increase. It's not, you don't get your yield from taking excessive risk. You get your yield because the underlying token emissions have upside because tokens go up. Wow. So you see risk taking go up with the rates going down. I think that's very good. On the flip side too is rates coming down means that newer types of assets will get tokenized. We're focused on broader fixed income markets. The first volley of tokenization was tokenized money market funds. Obviously, rates going down means tokenized money market funds are a little bit less attractive, but you're starting to see bond funds and mortgage funds and just more interesting assets start to be tokenized that have higher yield. And that's a good thing. I think one way I always talk about Ethereum is it's the settlement platform for all yielding assets. And so as you get more and more yielding assets onto Ethereum, it actually starts to create a lot of different options, and people can come there and actually get differentiated yield. And then once you throw in DeFi, once you throw in the fact that there's also this native DeFi ecosystem, and it has its own risk spectrum, and some of the risk parts of DeFi are actually safer than a lot of TradFi. I mean, DeFi's Uniswap, Aave, Maker have never gone down ever, even during giant stress moments. You'll see TradFi start to allocate to those for yield sources. So once you have DeFi compete with tokenized yield assets and novel new products that come on chain, and you have lower rates, which encourage more risk taking, all of that points to this ridiculous renaissance we're going to see. And that's why it's funny. I really think the bull market for ETH hasn't even started yet.
Makes sense. I mean, I think to your point, it also creates a bit of a defensible moat when, the potential next bear cycle is X many weeks, months, years ahead of us. If Ethereum as a platform has all these offerings that go beyond just, maybe high risk-taking activity, then therefore you create this defensible moat that people come towards regardless of the broader macro picture. So it looks like I'll be needing to stack some more ETH after this call. But I think Darius has a few more questions he'd like to pose on the bigger picture. So I'll let him have the mic for a bit.
I mean, thanks, Max. And I think maybe the elephant in the room, and I know, Vivek, you have been asked this already, but I also want to hear your answer here in this context. When we look at ETH, so there has been and also talking with some people that we mentioned before that we both know, this, let's say, narrative that some people say Ethereum as a technology will become highly successful without Ether as an asset appreciating in price. I got into crypto back in 2016, started with Bitcoin, but become very passionate about Ethereum, so was more in the Ethereum camp when being a Moxie was still a big thing back in the day. Now I'm still a preferentialist, but if you had told me Bitcoin would be over 100K, I would have said ETH must be at least at 10K, which we didn't see. So that when we look at adoption, as also we in the research team, we look at stablecoins, tokenization, etc. Also like the blockchain metrics, like decentralization, number of nodes, validators. I mean, Ethereum is leading. Like I always like to say when people bring up other ecosystems, where is the innovation coming from? Every big, let's say, subsector within crypto, NFT, DeFi, metaverse, whatever, originated out of the Ethereum developer ecosystem. They just gain traction on other chains just because they're perceived as, let's say, cheaper or faster, what we talked about. How do you see the relationship with the adoption of Ethereum as a technology and the price development of Ether as an asset? And maybe tied within this, was the L2 roadmap a mistake, or was it necessary? Because some people say they're parasitic. I know it's a very multifaceted. I actually already wanted to ask, how do you see Base and Linear, who say they're going to be Ethereum aligned? So maybe we have this as a follow-up question. But maybe on this, what's your take on this whole discussion? Yeah.
I'll preface it by saying that Ethereum is the most positive sum ecosystem ever. Ethereum creates this economy where everyone can win. So L2s should make as much money as possible, have as high profit margins as possible, onboard as many people as possible. That scales Ethereum. Ethereum layer 1 should continue to get better and scale and have privacy and have institutional grade security. That's happening. All of that's independent of the fact that ETH is an incredible asset. So part of this is it just took a long time for people to accept digital stores of value. It took 15 years for Bitcoin to become digital gold, and then it started taking off. Remember, Saylor started buying last cycle in, I think, 2020 or 2021, and that drove a lot of awareness and adoption for many years. It's not like Bitcoin just skyrocketed because Saylor started buying. It took years of his evangelism for institutions to realize, okay, maybe this is digital gold, and they started to allocate. Bitcoin did that 5 years ago. Ethereum's in the exact same place as Bitcoin was 5 years ago. So I just think that same store of value narrative shift is happening literally right now. This is why we worked on reframing ETH as digital oil. It benefits obviously from the Ethereum ecosystem growing, but as a standalone, it's an incredible portfolio asset. And thankfully, we've seen a lot of treasury companies. I was always saying that we need a MicroStrategy of Ethereum to replicate what Saylor did with Bitcoin for ETH, the asset, to reach its full potential. We got a lot of them. Lubin came out swinging and did sharp laying. Tom Lee's somehow amassed like a ridiculous amount of ETH in a very short amount of time. And all of these players, there's a lot of others. There's ETHZilla, there's BTCS, there's international ones as well. All of these are going to be voices for Ethereum, and all of them are going to tell the Ethereum story to Wall Street and to the public, and that just takes some time. So as we see more and more earnings calls happen, as we start to see what these treasury companies do with ETH as a treasury asset and how they can earn yield on it and how they have a productive store of value, it's going to be very quick that they say, okay, well, Bitcoin's an inert store of value, Ethereum's a productive store of value, and so a portfolio should be Bitcoin and ETH. And at some point, you'll see the weighting shift, and you'll see it say, okay, well, maybe it should be ETH and Bitcoin, and that's when we'll see this price appreciation potential. All of that's independent of Ethereum, like you said. The network is leading on all the metrics it needs to lead on: decentralization, security, institutional adoption. The more we see awareness and adoption of Ethereum and layer 2s that are all built on Ethereum, the more it's just going to justify people having allocations in ETH. So it's all tied together, but I think Ethereum will win. I think ETH can also win. I don't think it has to happen exactly in any sort of sequential order.
I see when we look at Ethereum, it's already like the leader and preferred choice for institutions, like let's say TradFi or other institutional players. What is for you looking forward to the next years? So what's the next step? I mean, obviously your mission is like to make Wall Street realize about Ethereum's possibilities. It's already the preferred choice. Is it like to increase it? Is it more like to educate them about everything that you can do on chain? Or what's your current focus at the moment? And also like, let's say for the year ahead.
So we respond to what consumers, retail, and institutions need to actually use blockchains. I think we're past the education phase now, and now we're in a show me phase. It's like people understand blockchains are here, people understand the technology is ready. Now they need to implement it as quickly but as safely as possible. And so when we talked to hundreds, if not thousands, of different players. Once we realized that all of them want to do something on Ethereum, but the tool sets aren't fully there yet to have seamless onboarding of all assets, all tokenized assets to Ethereum, and the requisite infrastructure like privacy and different compliant modules, we said, okay, you know what? Let's just build it because that'll help accelerate the roadmap. And so that's why Ethereum is more than just an asset, and it's more than just something to evangelize. It's an infrastructure. You can build a lot of cool things on. And so us doing our part for Ethereum is building cutting edge privacy for tokenized assets. It's building a framework for tokenizing all different kinds of assets, again, across fixed income, across real estate, across all these interesting asset classes that will bring yield to Ethereum. And then walking institutions along that path so we can hand them the tools so they can do this very quickly and efficiently until it becomes mainstream. So the next wave, I mean, we will always educate and market ETH and market Ethereum because it's really, really important. It's too good of a technology and it's not going to market itself. So we're vocal and active. The EF actually has a new institutional team that's also very vocal and active that we've been super close and partner with, and they're amazing. Joe and Consensus are very vocal and active. All the ETH treasury vehicles are very vocal and active. So we have a lot of evangelists. So we said, okay, let's start actually building the infrastructure. And that's the next wave. It's how do we get the next trillions of dollars of assets onto Ethereum safely, securely, privately. And that's where we're going for next.
I mean, this sounds very exciting. And maybe last question from me before Max, I think we can wrap up then the episode. It's end of the year. We are writing our, Max already mentioned, State of Crypto, our New Year's Outlook. Vivek, for you, if you have to give both for Etherealize and for Ethereum a couple of predictions for 2026, what would they be?
For Etherealize, we want to unlock new asset classes and new value and new use cases for Ethereum on the institutional and ultimately the consumer and retail ends that don't exist before, and create a privacy framework which is very necessary for public blockchains, and we want to do that very quickly. So that's gonna be our focus for 2026. In addition to obviously talking about Ethereum, talking about ETH, educating about I do that in my sleep. That's never gonna end. It's too big of a mission. For Ethereum, I think that Ethereum needs to cement itself as the most secure settlement layer for all tokenized assets. So I think we need to see trillions of dollars of tokenized assets come into Ethereum. I think that's a marker we have to cross. Everything's been pretty small so far. RWAs are in the tens of billions. Stablecoins are around 200 billion. All these numbers should be 100x'd. So that's what we want to see. We want to see the potential of Ethereum realized. And finally, with that, as that starts to happen, I think that we've been waiting a long time, but I think ETH is going to transcend into becoming a global store of value asset, and I think we see far higher than 10K at last, and then it'll cement itself along Bitcoin as a store of value, and ultimately I think it has a chance to flip it. So that's what we're playing for there.
Ooh, I love hearing this. So flipping is still a thing for you, because I remember back in the day, I think it was 2018-19, flipping was very much in the talks. So I mean, very, very exciting. I mean, from my side already, again, big thank you, Vivek, for joining our podcast and also spending some time with us, learning about your insights, especially being in touch with Wall Street, talking with them about Ethereum, and also very excited to see what comes ahead. I'll leave the final word to my research colleague, Max, to wrap it up, but it's a very insightful and cool podcast.
Thanks so much.
No, the only thing I wanted to add is I guess we'll have to do a follow-up next year with you, Vivek, to see if hopefully all these things come true. I wish we had more time with you. I wish we could have gone into, all things privacy related. I know for some of you following here, you're seeing some of the trends there with private networks and private tokens seeing a little bit of steam. So I would have loved to double tap there and learn a little bit more about all the cool infrastructure you're building. But you'll have Vivek V2 next time around as well. So thanks a lot again for joining Off the Block. Thank you mostly to our guests and of course to all our viewers. Feel free to subscribe to our podcast, check out our research on our website at 21 Shares, but of course be sure to also check out Etherealize. What they're building is really important to bring digital assets and traditional finance more closely together and on the largest smart contract platform in the world. So thanks a lot, Vivek. Thank you, Darius, and we hope to see you next time once again. Thanks.
Great to see you.